So here is the format of realization account. Realization account is prepared only at the time of dissolution of partnership firm. We have already studied revaluation account. Revaluation account we are preparing at the time of admission of the partner, retirement of the partner and death of the partner. And the purpose of revaluation account is to revalue the assets and liabilities. But realization account is prepared only at the time of dissolution. And the purpose of preparing realization account is that to realize the value of assets and liabilities. So at the time of dissolution we will realize, that is we will sell all our assets and liabilities and pay off all the liabilities. So here you can see the format of realization account. So realization account is having two sides, that is debit side and credit side. You can see two sides here. This is the debit side and this is the credit side. Particulars and amount is coming in the debit side and the same is coming in the credit side also, particulars and amount. The first thing what we are doing here in case of realization account is that we will transfer all the assets from balance sheet to the debit side of realization account except cash. That is very important to be noted. Here you can see all other assets, that is land and building, plant and machinery, furniture and fittings, bills receivable, sundry debtors. All assets are transferred from the balance sheet to the realization account but except cash. And here in the same manner in the credit side, that is all liabilities from the previous year's balance sheet, that is opening balance sheet, we will transfer to the credit side of realization account. First one is sundry creditors, bills payable, bank overdraft, outstanding expenses, provision for doubtful debts. All liabilities we will transfer from the liability side of opening balance sheet. Okay. So first we will transfer all the asset to the debit side, then we will transfer all the liabilities to the credit side of realization account. Next what we are doing is we will check in the adjustment which all assets are sold off at the time of dissolution of the firm. And when we sell the assets we will get cash from the sale of asset. So we will write here cash and below that we have to show which all assets are sold off. Okay. So cash here it is written cash. So here we want to write cash and which all assets are sold off. In brackets you can see sale of asset. Suppose we have sold land and building, just below that you write land and building this much amount in the inner column. Then plant and machinery in inner column. At what price it is sold off. Sometimes the book value may not be realized. Then furniture and fittings we will write here furniture and fittings. Then bill receivable, like that. All the assets which are sold off we realize we have to write here. And the entry is cash, that is cash account debtor to realization. When we transfer the assets to realization account, the entry will be realization account debtor to assets. And when we transfer liabilities from balance sheet, the entry is liabilities account debtor to realization. Okay. So when we sold off asset, the entry is cash account debtor to realization account. So here you have to write cash and all the assets just below that you have to mention which all assets we have sold at what price. The total we can write in the outer column. Okay. Likewise here also if the liabilities are paid off by the firm, we will the cash is moving out of the business. So the entry is realization account debtor to cash. Below that you have to mention which all liabilities are paid off. Total amount you can write in the outer column here as in the case of asset. Then next comes the assets. Sometimes the asset, instead of selling it to the outsider, sometimes one of the partner might have taken over those assets. So if partner is taking over the asset, we can write here instead of cash we will write here partner's capital. Suppose A is taking over furniture, the entry will be A's capital account debtor to realization account. So here you have to show A's capital account and the amount of furniture we can, at what price that furniture is taken over by A, that we can write in the amount column. In the same manner, sometimes liabilities will be paid off by one of the partner. So here we can write the entry for paying of liability by the partner is realization account debtor to partner's capital account. So if the liability, whichever liability is paid off by the partner, you can mention either in bracket and at what amount he taken over that liability, that we can write in the outer column. So if asset is taken over by the partner, the entry is partner's capital account debtor to realization account. If liability is paid off by the partner, entry is realization account debtor to partner's capital account. And if there is any unrecorded asset, that will come in the credit side. As in case of revaluation account, suppose if there is any payment of any unrecorded asset realized, then only it will come in the credit side. If it is not realized, no need of showing the asset here. So if there is any unrecorded asset and if it is realized, we can show in the credit side. Likewise, if there is any unrecorded liability, we have to show that in the debit side of realization account. The entry will be realization account debtor to cash. If unrecorded asset is realized, the entry will be cash account debtor to realization. Okay. Then finally what we want to do is that these are the things to be done in realization account. So once again I will tell, first we want to transfer all the assets to debit side of realization account. Then we have to transfer all the liabilities to the credit side of realization account. And if there is any asset realized, the entry is cash account debtor to realization. So cash we have to write here in the credit side, and whatever amount we have realized out of that sale of asset, total amount we can write in the outer column. Individually we can show in particulars column. Likewise in case of liabilities also, if the liability is paid off by the firm, the entry is realization account debtor to cash, and the amount, the total liabilities paid off, we can show in the outer column. Then if any partner take over the asset, the entry is partner's capital account debtor to realization. If any partner take over liability, the entry will be realization account debtor to partner's capital. If there is any unrecorded asset, the entry is cash account debtor to realization. Unrecorded liability, if it is the realization account debtor to cash. And another important thing is that if the asset realized is not mentioned, if suppose plant and machinery was there in the business, and if the value of plant and machinery realized is not given in the adjustment, it means plant and machinery is valueless. Okay, so no need of showing plant and machinery here as a realized asset. Suppose land and building was there and the value of realized value of land and building is not mentioned in the adjustment, no need of showing that here as cash. Okay. So if the value, realized value is given in the adjustment, then only we want to show that here as cash. But all the assets we want to transfer from balance sheet to the asset side, debit side of realization account. Then finally what we want to do is that we want to balance the realization account. Okay. So find the total of the credit side and the debit side and see which side is more. Suppose credit side is more, this side is more, we will get a realization profit as the case of revaluation. Same as that of revaluation. So if the credit side is more, we will get a realization profit. So that realization profit we have to show here. So balance will come in debit side. So we can show that realization profit here. Okay. And the credit side total we can write in the total of both sides, because the heavier side amount we have to show on both sides. Okay. And the realization profit here we can see, and that we will be transferred to the partner's capital account In case of dissolution, all partners' capital account in their profit sharing ratio. Here only one profit sharing ratio will be there. So, in that profit sharing ratio, we can divide that amount of profit to all partners. Total amount of realization profit we can show in the outer column. And here in case of debit side is having excess balance. Suppose debit side is more than credit side. Then the debit side total we will write on both sides and we will get a loss here. And we are calling that loss as realization loss. This realization loss will be transferred to all partners' capital account in their profit sharing ratio. The total of loss we can show in the outer column and partners' capital account we can show separately here in inner column. So this is a format of realization account, and without making realization account we are not able to dissolve a firm. So the first step in case of dissolution of firm is the preparation of realization account. Okay. Hope you all understood the topic. Thank you.